Thank you very much. Chuck is going to join us in just a moment. I do want to make a comment because I wanted to mention Kirk is still here, but he's just slightly outside the studio. But I know he can hear me. Kirk and we wanted to talk about the great Roger Federer, who is now 6th ranked in the world with his win at Indian Wells. The court was 119 degrees, and Roger Federer was just masterclass again. I love his modesty when he's saying he didn't think he'd get me. He just was hoping to get to play a couple of matches, and once again, he powered right through the entire tournament. Kirk and I, very, very big Roger Federer fans. Kirk, do you think it's possible that Roger Federer is playing the greatest tennis of his life right now? Kirk is shaking his head, yes. That's incredible because there's never been more competition.
No, and the quickness.
And the quickness, absolutely. And it goes to show you that something that looks devastating, like his knee injury, he rehabbed properly, and his body got to heal. He got to rest. And that's 6 months. I mean, whew. I'm not going to say that people are going to start putting lengthy, vacations in on their year schedule, but look at what he's done. I mean, you can't argue with the results. He's been absolutely fabulous. Chuck Malamut is here. The following program is presented by Chuck. He is a financial advisor at Morgan Stanley. The information, views, and opinions expressed on this broadcast are those of Chuck Malamut and do not necessarily reflect those of Morgan Stanley or its affiliates. They are current as of the date of this broadcast, subject to change without notice. Neither the information provided nor any opinion expressed herein constitutes a solicitation for the purchase or sale of any security. This presentation is for informational purposes only. Morgan Stanley, Smith Barney, member SIPC. Before we get to Chuck, let me, and I didn't put his mic on yet, let me talk about Chuck for a quick minute here, because I saw something the other day that was extremely well-deserved, a very, very nice size advertisement that reads, Morgan Stanley is proud to congratulate Chuck Malamut, named one of Barron's top 1,200 financial advisors. That's in all of America. Being recognized as one of Barron's top 1,200 financial advisors is a testament to the high standards you set for yourself and for the level of service you deliver to your valued clients each and every day. Thank you for the experience, professionalism, and dedication that you bring to carrying on the long tradition of excellence at our firm. And this is the Malamut Group at Morgan Stanley. Chuck Malamut, Managing Director of Wealth Management, and his whole Northfield address, phone number for all of your financial planning purposes, 609-383-2010. Chuck, I thought that was very nice, well-deserved.
Good morning, Harry. Thank you.
How's it going?
Well, if I could just be the Pocket Kreskin.
Pocket Kreskin, thank you.
Then what I do all day, it'd just be so simple. I would not have to go to work.
You know, it takes.
I could literally phone it in every day, send all of our clients some sort of communication.
Easy.
Go left, go right. But I think Morgan Stanley would probably not think kindly very, very kindly of that. So I'm going to probably get off of that subject very, very quickly. But
I thank you, Chuck, and I do accept humbly my election to and my ascent to Pocket Kreskin.
Yeah, it's amazing, Harry, how you get all these self-appointed positions.
No, that wasn't self-appointed.
No, that's okay.
Kirk did it.
Harry, listen. If I can't,
Chuck, if Pocket,
not just a little bit.
Here's the thing: if Pocket Kreskin makes me happy, can't you just give your little brother a little love?
Harry, I called you over the weekend. I chatted with you. It was great. It was, of course, I love you. You're like my brother.
And I like that you came in right out of the box, calling me Pocket Kreskin.
Yeah, so we're just brothers from a different mother. That's all. It's no big deal. It happens all the time.
One of my other favorite things in the morning so far. At one point, Andrea from Summers Point called me Pocket.
I did hear that.
I loved it.
I heard that.
I loved it. So I'm going to go with all that, and we're going to make that famous. My goal. You know, I always set goals, Chuck. I learned that from you a long, long time ago, almost 40 years ago. Set goals. My goal is for the amazing Kreskin to call me Pocket Kreskin. That's a good goal, isn't it?
Harry, yeah. I mean, that would be just remarkable.
I think he's going to do it, too. I think I'm going to create the atmosphere where it's going to happen. if it happens, it's got to be a promo. We have to get Executive Program Director Chris Coleman to get that fancy Fox News channel announcer that we have all over our station that does all the intros for Hannity and all these other people on the Fox News channel itself to do a Pocket Kreskin little promo. Anyhow,
so
you.
Harry, it was just we're sort of in a quiet period right now with respect to the markets as far as earnings are concerned. As you know, we are quickly approaching the end of the first quarter, and companies basically are required, where they have a period of time where they can't come with anything that's substantial, and as a result of that, what we have seen over the last several weeks, with the exception of when the day after President Trump's speech, the market has been, for the most part, relatively quiet. And when you kind of put it all on perspective, it's still pretty remarkable that the S&P up 6.7% year to date, the Dow Jones up 6.5%, the NASDAQ, the clear winner, up almost 10%.
Chuck, I was happy that our markets didn't lose their way during yesterday's insanity of the Congressional Intelligence Committee hearings, because that was gavel to gavel on every news cable channel throughout the world, probably, but certainly throughout this country. And the markets just yawned. No
Can I see
effect.
That yawn again, please?
Just like that.
Well, Harry, look, we've talked about this before. The markets, have definitely matured over the last decade. There's no doubt about it. We
10 years ago, they would have hemorrhaged a little bit yesterday. It would have been upsetting and
worried
about a scandal with the president and could it lead to impeachment. And I think the markets would have at least had a major hiccup. Yesterday, nothing.
And you know how we always chat about geopolitical risks.
Yes.
And certainly what has happened is that now the markets are at the point in time where there's very, very little. I don't want to say geopolitical risk. I mean, if you talk about, the airlines, just yesterday, all into itself, there was an announcement that certain airlines coming from a number of countries are banning, all electronic devices to be on a plane. They could be, with the exception of maybe a cell phone. And so if you think for a minute that Al-Qaeda has gone away, it certainly has not, because we're now at the point where, it's being clearly recognized. And you would think after that announcement was made that the markets would have a fit with respect to, okay, all right, we have a real problem here. And lo and behold, as we look at this morning, the futures are up, slightly. But, I think a lot of it is that we are just sitting here waiting for earnings. And they will come fairly quickly, and that's going to, I think, give the market a fair amount of direction. Now, here's what's pretty amazing, Harry. You are the amazing Pocket Kreskin #1 made his prediction about interest rates. And I'm surprised that you didn't run down to my office when at 2:15. You must have been very busy or something.
I am very busy, as you know.
But you could have taken time out of your day to come visit with me. But anyway,
it wasn't even when you make a prediction that like low-lying fruit. It was like the apple was on the ground and I just picked it up and took a chomp out of it. It was like when I predicted Brexit when you were going the other way, or all these other occasions that I could cite. Hence, Pocket Kreskin.
It's amazing.
Back to you.
It's amazing I can get up and get dressed in the morning. Huh? But
listen, you're the Barron's guy.
That's true.
Okay.
But so look, the Fed obviously raised interest rates 25 basis points. But I think what was amazing about the statement it was not unanimous. There was one Fed president that thought the rates should not move higher, but the Fed was very, very dovish in the way they made their statement. And, they basically said, Harry, that they kind of signaled that they're going to continue to raise rates, but they're going to raise them slowly. So again, the central bank's dovish statements that they made seem to signal that they're going to look at this slow and moderate pace of rate hikes. It's not going to be I think every meeting, I always think about
but
that
still,
staircase.
Wait, though, they're still standing by 2 more, though, this year. And if that was 3 or 4 in 1 year compared to none in 10 years, I call that on like almost speed.
I think, Harry, that the economy, for the most part, looks a little bit different now, and I think a lot of it is going to be dependent upon, again, what we talked about a minute ago about corporate earnings. And the fact of the matter is that the unemployment rate, and you can argue it one way or another, is it really 4.7? But the fact of the matter is that the jobs that are being created now are higher paying jobs versus your traditional service oriented jobs. So if it's 4.7, it's a different looking 4.7 unemployment rate than it was, say, 12 or 18 months ago. And the other consideration is that
so in other words, it's a legitimate one now.
Well, I don't know if we're quite there yet, but the other thing to consider here is the fact that wage increases year over year are close to 3%. And think about what the Fed has basically said, very simplistically, is they want some inflation. And now we are at that point in time where they can actually legitimatize the fact that it's okay to raise rates. And think about the bond market. I mean, the curve, as we know it, the yield curve, is typically sloped, where your longer end of the curve, your maturities, traditionally have the higher rates. But what we're having now, I think, Harry, what you're going to continue to see is the curve will become more flat, where there's not going to be that much of a differential between your shorter rates and your longer rates, and that's going to help savers. Think about how many years savers at banks have been penalized because of the interest rate environment that we live through. I mean, you couldn't earn money in a savings account.
Correct.
So now,
actually got to the point where you weren't suggesting, but you at least
we chatted about it.
Negative.
I mean, look, there was some, there was negative interest rates, across the world. I mean, and so
could you imagine the shock to the American people? It's one thing to earn a fraction of a percent of a yield. Could you imagine the shock in our culture where people would be putting their money in some sort of deposit account, a savings account, or whatever the instrument might be, and actually it would cost them money to park the money? That would be just shocking to the psyche.
Oh, Harry, it would be.
People would be like, yeah, "Come on!" They'd be looking for the mattress.
I think you'd have a lot of banks, unfortunately, probably basically going out of business at the end of the day. So
get the money.
So if you take a look,
how about right after the break? We'll take a look. Fair enough. 18 minutes past the hour. We're 2 minutes late for the break.
Sure, Harry.
We're going to come right back. He is Chuck Malamut, or as Assemblyman Kirk Conover calls him, Pocket Buffett. I love it. I love it. Chuck shrugging his shoulders. There is a smile. He's a tough guy to read. I don't know if he likes it yet, but we might be able to make that famous. We might be able to make that stick. Pocket Kreskin and Pocket Buffett. Back in just a moment. Chuck Malamut, for all of your financial planning needs, turn to the exclusive financial advisor to the Hurley in the Morning program, Chuck Malamut. He's the managing director of his team, his group at Morgan Stanley, the Malamut Group, 609-383-2010. This portion of our program is also brought to us by the Virginia Hotel, fresh in our mind because we stayed there for the first time a week or two ago. And I guess it was technically a long week ago. We stayed Friday and Saturday of last week. And it was just great. The week before, actually. It was just great. We loved it there. It's everything we've been telling you about for more than a decade and a half. They have the spring retreat that's going on right now in honor of the vernal equinox, which was yesterday, the vernal change where literally we move forward. And the weather hopefully is going to turn. It's going to be nice today, although not sunny. And tomorrow is going to feel more like last week when it was that terrible weather. But then I think it's going to warm up again pretty quick, and we'll venture into spring boldly. But you can enjoy a $30 dining credit per day of your stay, spa discounts, and also ask for the late checkout, which is awesome. Most hotels, Malamut's the guy with the Cornell Management Hotel degree, but most hotels went from 12 noon to 11 a.m. checkout. you can get actually a late checkout at the Virginia. We asked for a late checkout. We got it, and it was great. The Benjamin is in effect. That's a $100 resort credit. You can reserve either on the World Wide Web at virginiahotel.com or dial toll-free 800-732-4236. Tell them that Hurley in the Morning sent you. And one last favor, I'm telling you, you will thank me for it. Make it a point to dine in the Ebbett Room. What a fabulous restaurant. The meal is sensational. The atmosphere is wonderful. It's an experience. You will love it. The Ebbett Room. It's a famed restaurant right in the Virginia Hotel. Thank you very much. Chuck Malamut is here for all of your financial planning needs. 609-383-2010. You'll understand very, very quickly Chuck's perfected concept, decades perfected, of total asset management coupled with the all-important asset allocation. So, Chuck, are you still in your market update?
Yeah. So, Harry, let's kind of talk about what I'll kind of describe as the Trump economic agenda. I guess it's probably, I mean, you've heard it a number of different ways. So, and every day, you can't get out of the way as to what we're hearing. So, the number one focus is obviously what's going to happen with healthcare. I know that you and Kirk kind of chatted about that a little bit, earlier today, and then the budget.
Yeah. By the way, on healthcare, Chuck, what people aren't focusing on enough is, and they're being very critical of what the Republicans are doing, but when you only have 52 senators and you have the filibuster, they are very restricted in terms of what they can do without having to go legislatively in a way that would open up the filibuster. This is what I'm trying to say is this is a very challenging situation if you didn't have politics.
Right, but philosophically speaking, when you think about it, Harry, they're both very, very big tasks to look to achieve. But the fact of the matter is that and I don't want to get political, but I know that President Trump was in Louisville last night and he mentioned a couple of times about draining the swamp. But the fact of the matter is the potential reorientation of the federal government. You think about what has transpired in his 52 days, I believe, or now 53 days. It's pretty remarkable. So if in fact we're able, Trump presidency and the GOP is able to get this accomplished, it's going to have, on a go forward basis, it's going to really pretty much shape the growth in the financial markets. But the number one concern or the number one issue that's going to have the greatest impact is tax reform. We really haven't chatted about it a lot. There's been some discussion, but I think they want to get through healthcare, reform. But we talked about repatriation, multiple times on the show, Harry, and the fact that there's $2 trillion now overseas that could come back here to the U.S. So if we're able to get a plan in place that brings the money back, it's going to allow the government to tax the profits and produce revenue that could help sort of back the tax cuts or the infrastructure spending that that President Trump has been talking about. So I think there's certainly going to be more to come on that front. And there's a very, very high probability, Harry, that passing the tax reform is going to happen. The markets have already priced this. You think about what is accomplished, from the night of the election. That's why stock prices remain high. Bond yields, have risen somewhat since the election. But interestingly enough, after the Fed made their announcement last week, on the longer end of the curve, rates actually dropped. So, investors for the most part are looking for.
By the way, you were pocket Kreskin on that one because a lot of people assumed automatically that it would have to go the other way, but it didn't.
No, Harry, and we.
How do I mean? I guess like you said, if you were Kreskin, you could just mail it in. Some of this stuff is impossible to figure. You almost have to see it play out because I would have thought that would have meant that rates would have gone the other way, but it didn't go that way.
Well, look, we're at the end of the cycle. I mean,
Yeah.
it's
True.
If history, marks sort of where we're going, it's Harry, it doesn't come as any surprise. And if you are chatting with a client and you're looking to, how are they going to ascertain, how are they going to get to their goals, and for the most part with, an individual investor or family, with respect to retirement planning, and, you just got to sort of plow forward and look at what, their goals, dreams, and aspirations are, and how you're going to hit it. So, do you sit and leave the money yielding 50, 75, maybe 100 basis points, or do you push it out a little bit and get, in the mid threes and close to the low fours? So,
how concerned should we be about inflation?
Harry, look, I think inflation is here. I think we should be concerned about it. If you look at the fact that there is wage growth, that basically implies that inflation is around the corner. So inflation right now, quote, is 2.3% roughly. The Fed wants it, close or over 3%. And we don't think that's such a bad thing right now. I mean, we think that's going to help equity prices. For people that don't understand
why they didn't push for inflation for 8-10 years, but now they want inflation over 3%. Why do they want that?
Well, I think, Harry, I know where you're I know where you're going to go, and you and I are going to, we're kind of probably going to disagree a little bit. I mean, statistically, reports that come in are pointing to the world's different now. I mean, I guess in the simplest way,
What November 8th happened and the world is different?
The world is being shaped to be a little bit different now than it was, a year or so ago.
Would you agree with me that America is poised to take the lead again?
I think for sure. I mean, there's no doubt about it that we will regain our presence as the premier country. Within the global economy.
And that's always been a good thing. Let's take our halftime break. It's Chuck Malamut. For all of your financial planning needs, turn to the exclusive financial advisor for the Hurley in the Morning program for 26 years on this program. And Chuck has been doing what he's been doing beyond those over 30-plus years. 609-383-2010. That's the number to reach the Malamut Group at Morgan Stanley. Chuck Malamut. 2017 Barron's. It's not the first time, incidentally. He's been on it many times. Just the latest installment. 2017 Barron's Top 1200 in America, Top 40 in our beloved Garden State. A Sean Hannity update next. Quick promo. And then I'm going to be telling you about the latest at Angeloni's 2 Restaurant and Lounge. Just a reminder, when you hear me talk about Mama Angeloni's incredible 3-course, multi-course extravaganza on Sundays during a holiday week. It's not in effect every other week during the year. It is, unless you hear me say differently. 34 minutes past the hour. Chuck Malamut, our official financial advisor. So we've done the market update. You're talking a little bit about the Trump economic agenda.
Yeah, we talked.
Fed.
Yeah, we did that. We talked a little about the Fed. We think a couple more hikes. Again, it's like what I immediately thought about when I heard this and read it and watched is, remember in Greenspan, you had that chart, and it looked like a staircase.
Yes.
Where every meeting there was an increase,
Yep.
and then 25 basis points, and occasionally 50 basis points, and but it went on and on and on and on, and it never wanted to end. I think you're going to find that chart. It's going to look a little bit different, I think, this time around, but. Hey, Harry, in a perfect,
but similar to that, like
I don't. No, not every.
Okay.
But think about this for a second. If we're able to accomplish what the president wants to get accomplished, what is so wrong with higher interest rates? Because that is going. You think about you're going to have an equity market, and you've never ever heard me make this statement. I never will. Hey, Chuck, is the market going to move higher, or did the market reach a top? I mean.
Right.
You think about, a lot of people are saying equity prices, are expensive right now. But if we're able to create earnings on a quarter-to-quarter basis and they increase, Harry, I would expect that volatility is going to increase. We haven't seen much of it, in the last several months. But, taking an overweight position in equities on a long-term basis, probably still makes sense.
So let's see if you agree with this statement. for about a decade, we artificially kept rates at or near zero. That's unprecedented in the entire history, of America to do something like that. The government was tightly controlling because of the concern of, the 2008 meltdown and, the other things that were going on and the Great Recession, and that we are now going to let the free market actually sort of take charge a little bit. Is that a fair assessment?
I think that's well said, because
that would be good.
If you let corporations operate, and you think about, use banking as for instance, how many government employees are literally working at bank headquarters, we'll call it. It's just amazing. So if government's able to reduce and allow these corporations to operate, then that's going to create higher earnings, which ultimately is going to create, higher equity prices. Now, on a go-forward basis, you think about, you need to buy equities, do you buy treasuries, do you buy other government bonds? We think that there's probably, there's volatility.
Let me get to one of your topics. Are equities too expensive?
Well, Harry, we think that there should be some volatility, but if companies are able to produce earnings and create, think about what we always talk about. Top line misses, bottom line we get there. We need to get top line to exceed and bottom line to exceed. I think if we're able to do that, then I think there's a fair amount of movement, with respect to equity prices. Now, don't expect to go up 7% to go up plus 18. I seriously doubt that that's going to happen over the course of this year. There's a lot, as you know, interference out there that needs to sort of be cleared out to be able to, to get people focused. And I think what's interesting, Harry, when you hear so many people say, equity prices are way too high, they're going to move lower, then what happens? What happens to the contrarian theory? Typically the opposite will happen.
Yes.
So that's not to say that you go in with both fists loaded up with cash and you buy you margin yourself and you buy nothing but equities. You have to have a balanced approach. And I think what's really important here that oftentimes investors lose sight of is the fact, what are your goals? I can't tell you how many discussions we've had over the last couple of weeks saying, hey, S&P is up 20, I'm up 12. Yeah. Okay. Well, your accounts are diversified. You do own fixed income. You do not own exclusively equities. And let's think about when we did your retirement analysis, the life view, as we call it. What is your probability of success of getting to your goals? If you're at 93% probability of success, and you have a balanced account, why in the world, Harry, would you want to put that at risk?
You shouldn't. And you shouldn't be thinking, oh, my God, I'm down 8%. You're up 12 and you're diversified, and nobody really is ever going to have the perfect blend of all the stocks that make up that 20%. So 12%, who would really complain about that? One of the other things you've talked about on your show, Chuck, and I do agree with this, I won't promote high inflation or an environment of raising, the interest rates at the Fed level, time and time and time again. But when this does happen, many of our seasoned citizens that have been dealing with their fixed, assets in either short-term CDs or in savings accounts or money market accounts where they've been basically earning fractional to zero return, they're going to start to actually see.
Yeah, it's you go from 50 basis points, to 150 basis points. Well, that's not a big move in dollars. It's a substantial move in a percentage basis. And Harry, we think that that's very, very probable, and the equity markets will probably not, take a hit as a result of that. So the big concern here is that, think about this for a second. What can derail the equity markets at this point in time? The economic data that we have been receiving, almost, more times than not, has surprised to the upside. And if we end up with a number of disappointing reports, that could change the sentiment as we know it.
Yeah.
You go from that old adage, the glass half the glass half full to the glass half empty. If the pro-growth legislation that we're hopefully going to see from Washington, if it takes too long and investors get impatient with the progress or the lack of the progress, we'll call it, that could in fact, have a negative impact, with the markets as well. Think about last week. I mean, as you mentioned, as I watched you yawn twice earlier today,
3 times.
Investors were very complacent about the Fed rate hike.
Yeah, I like that.
And especially the fact that they can become more aggressive as we get into the next several months.
Chuck, is that also proof, though? I mean, I'm not a fan. I'm not a Janet Yellen fan, but I'm not a hater either. And I know what I believe in my heart about how they're operating now because of the change in political parties. But for your show purposes, I think they did it right because they did it in a way that it was already built in. The markets knew it was coming, and I thought it was handled very, very well. No surprises.
Yeah, and the fact that they're again after the initial announcement, the fact that they're dovish. I mean, they want to, I don't think they're trying to undermine, what the president and his administration is looking to get accomplished.
I think they're being more aggressive than this label they're giving themselves as being dovish, because I don't think what they're doing is dovish, especially considering the past decade. This looks pretty aggressive to me.
Well, sort of on a go-forward basis, when we see the economic reports and corporate earnings come in over the next several months, and we'll see what they and how they treat the next meeting. Now, the other thing that's happened, Harry, and we haven't really chatted about it, the fact that China has their potential growth, if it in fact slows down as it's anticipated. That could be one of the hot spots geopolitically speaking, globally. So that's something that we need to think about.
They look ripe for a downturn.
They do. So if any of those events that we just kind of talked about, if they do in fact happen, don't be at all surprised if investors get a little anxious, reduce their equity exposure, maybe equity prices. And Harry, look, there's nothing wrong with doing what we're doing right now. You just sort of, you're in that base building again.
Yeah.
You go from, and again, we don't like to talk about numbers, but you go from 20,000 in the Dow, right? Yeah. And then you go right immediately to 20, and then as a result of that, now you sort of go through that back and fill process. So, again, equities make sense in any portfolio on a long-term basis.
Here's an excellent question from the Assemblyman Emeritus, the Wharton School graduate, Kirk Conover. The end part, I think, is really challenging, but I'll read it exactly how he has it. You might only want to answer 3/4 of this, but if you want to go the full road, the question will be out there. The prime rate right now is 3.75. The Fed discount rate is 1.25. That is a good margin for bankers to make loans. How much higher do you think the prime rate can go before it starts hurting the economy? And what does Chuck predict the prime rate will be at the end of the year? That's the part I thought that was tough for you.
I mean, if you think about it,
isn't that a good? That's what I was saying earlier. It's a really good point, though.
The spread is correct.
Yeah,
and it gives once you start moving rates, it gives the banks the ability, because the margins were so compressed, to be able to now they can make money. I think for the most part, every time you get a Fed rate increase, the banks are no sooner do you see that come across, within 90 seconds, the first bank comes in and raises prime.
And that's why I think Kirk and I made the same point without a Wharton School degree, that I'm worried if they too aggressively go about this, how high can it go before it starts to hurt the economy?
I think Harry, and again, I certainly don't want to predict, but if you think about historically, what happened to our economy is, as higher interest rates pretty much choked off, growth. I think we have a ways to go here. Is it 3 hikes, 5 hikes, 6 hikes? I'm not going to stand here with you and make that prediction. I think it would be rather foolish of me to do that. But what I do understand is the fact that increasing rates on the short end of the curve is not going to be detrimental to our clients. That much I do know.
Anything you want to share in closing?
No, look, I mean, I'm sure your bracket got busted. You know, you probably were a big Villanova. I know you're probably a big Duke fan, but that's okay. You know,
it's interesting you would say that. This is the first year that I can remember in my adult life I didn't do a bracket this year. And I'm not being a wise guy. That's how busy I've been. I have been impossibly just focused, and I did not even do a bracket, and I've never not done that. But I would have picked Villanova to still be alive, and I would have picked Duke.
Yeah, so the contrarian, being the contrarian.
you got the
no. I would
Southern Methodist. Peter of Azizi.
I'm not going to go. I'm not going to go on air and tell your wide range of listeners who I selected to be the winner. I'll tell you that, but I will tell you, I still have a live bracket. How's that?
I'm not surprised because you are fearless. You are Chuck Malamut. You are Barron's Timber, and you're not afraid to be the contrarian.
But I mean, Harry, this is the greatest time of year. There's no doubt about it.
This is good for you. Kentucky got beat. Villanova got beat. Duke got beat. This is the contrarian's dream.
Yeah, when we go off, I'll tell you probably won't believe who I picked, but we'll know better after the weekend if I survive. But it's just.
But you're in the Sweet 16.
Yeah, it's wonderful. It's a great time of year, no doubt about it. Harry, thanks for having me.
Thank you, Chuck.
We will see you next week. Okay.
Thank you very much. He's Chuck Malamut. For all of your financial planning needs, turn to the Malamut Group. They're at Morgan Stanley. 609-383-2010. A mini open forum segment to conclude this hour. We have Dr. Mark Newkirk for 30 minutes in the first half of next hour, and then wide open forum to close out today's Tuesday edition in the People's City Hall. I am Hurley in the morning. We'll be right back.